Good morning, everyone. And it's actually it's a much better, stage now. Today we can see the sun, and so welcome to the stage. Research and innovation is really, really close to my heart. And, when I started, I was 20 years ago. I was an academic myself, and since I started joining the industry, I was thinking of, I want to do something in the real life. But 10 years ago, I found myself actively, coming back to academic. And that's part of the reason was because I was started a job which is building and experimenting a disruptive data monetization opportunity with mobile industry, as experiment, all the stuff which didn't exist before. So I found myself impossible to do it with the stuff which is, commercially available on the market. So I feel like, I really need to get back into the research stage and looking at what is happening and where is the, disruptive angles in there. So I found myself now not going back 10 years, almost every single job I've been doing, I really feel the benefits of working with researchers and working with the larger ecosystems and really building that the scientific framework and pushing the boundaries and converting things that we as an industry kind of not so comfortable with, which is creating IP and contribute back to the society. So today we have an amazing opportunity with Alan Turing Institute, and these are one of the best expertise in the country. We're very excited in here. And also we're working with Google, for example, on building new technologies in our cloud journey. We invented some of the ways to upload data, for example, onto cloud in a machine learning-based approach, and we want to open it, as an open source, even provide them to other part of the customers to use. I want to probably mention one observation and two key success factors, in my experience. Just a very quick show of hands. Who consider themselves as academics? Cool. And who consider themselves as industry? Wow. And who consider them as both? Great. So that's one of my observations. I'm going to come back to that towards the end. The two success factors, I want to share. The first one really is a shared goal. And I think sometimes this is almost like the starting point of writing the paper. You put in the motivation. So that motivation absolutely has to be a shared between academics and between researchers and the startups and the company. So today, and that has to be around the customer and has to be around the purpose of what we're trying to achieve. So today, for example, in HSBC, we have 39 million customers across 67 countries. They are retail customers, they are small businesses, but they also large corporates and government across the border. So we have 50% of them are digital population. 80% of all the transactions are in this space, and we have about 190, 180 something petabytes of data. So the opportunity here is enormous, and for us, really providing our purpose, which is connecting customers to the opportunity. And today, those opportunities are in the space where we haven't managed to do properly previously. For example, in the digital, in the security environment, we want to provide a seamless signing process. For example, we use Face IDs and voice and fingerprint in about 20 different markets, and we have 350,000 per month live conversations going on, and those conversations we need to be a lot more tailored and relevant to the customers' more prompting, to what they're trying to do. And in the space, like, cross-border transactions, we have last year enabled about $250 billion worth of transactions through distributed ledger. So these are all the innovation, which is a lot to do with machine learning and AI, the capability, but the purpose is to serve that market. And we got a really, really big challenge in our anti-money laundering, for example. These are enormous opportunity to do that. So that's one thing, is we need to come all the way from how do we enable that, connecting the customer to the opportunity, and from every stage, a small roof shot, but also moonshot, eventually getting into where we want to be, as a shared purpose. The second kind of a key success factor is really around our own behavior change within the organization. So research is not really a one project, it's the behavior, and it's the behavior we gotta repeat all the time. It's very challenging. But on the whole, the change doesn't happen overnight, and just because you have a project set up, and that way of researching, way of innovation is going to become our day-to-day life. So that's why one of the observations I've seen is a joint career path between academic and industry has really becoming a really success, career path, and people coming in from academic background had a real, career, and then we have a real need for those people to take part in our transformation. So that's kind of it does take courage to be in this space and to do research and innovation in a large corporate, especially, and it take a lot of courage, as we said yesterday. So thank you. That's if you have ideas and opportunities to work together, and we should have a chat. Thank you.
Thank you very much, Amy. If you've got any questions, please jot them down. There will be plenty of time for Q&A and panel session afterwards, after the three presentations. So the next presentation comes to us from Lukasz, who's our program director at the Turing for Finance and Economics, and is also based at the University of Edinburgh, and as a Turing Fellow, and I'm probably forgetting other affiliations. Lukasz joined the Turing last year as program director, and he's going to talk to you about some of the cutting-edge research going on in the Turing that's relevant to finance and economics, and examples of existing applications as well as potential applications where the research could really make a difference. So, Lukasz, over to you.
Thank you, Nico. So good morning, everyone. Thank you for being here and coming for this session. So I'm, like Nico said, I'm a program director for Finance and Economics program at the Turing. I'm also a mathematician when I'm in Edinburgh. I'm trying to be, at least. And I want to tell you today a little bit about Finance and Economics program and give you an example, a couple of examples of things we want to do and the things we're doing. So I start with a vision. So we run the program to develop cutting-edge methods to foster financial innovation and deeper understanding of economy. And we want to make sure that the research we do benefits society. So that's our vision. That's the key thing we do, and the strategic objectives that we have at the moment in the program are: we want to advance economic data science. So that is a combination of economics with very rich data sources that are around us. We can do now extremely interesting things. We have example of the project actually of working together with HSBC, that we are looking at transactional data at the anonymized per postcode, and by analyzing financial activity, we can map that to online estimation of GDP. So now we can measure economy in real time, that could be very interesting from the perspective of policymakers, so they can understand how their policies actually impacting society, how they work. They are very interesting things. I think we are getting close. I mentioned a little bit more on that at the end. We are getting a little bit close in terms of the technology and compute that we have to start thinking and building a digital twin of economy, so as to model economy as it really is evolving, that would enable to do simulations and understanding, again, how various policies will change what is happening in the future. So I think this is very exciting. The other thing that we do is we want to promote responsible adoption of AI and data science in financial services industry. And we want to do that by trustworthy and scholarly leadership. There is a lot of noise out there. There's plenty of algorithms, plenty of methods, and plenty of challenges with data itself. And we want to make sure that financial services industry is really benefiting from these methods. So we want to drive this independent research that solves real problems and is taking into consideration. Oh, hello, we have another person attending a session. So there are great challenges. I'll mention a little bit more about that. There are great challenges in financial services industry in that the data is often non-stationary, is dynamic, is changing, and is very, very noisy. So that's clear differentiation from all the great things that we're seeing around applications of AI in speech recognition or image recognitions. These are typically static scenarios. And I believe that the third point is very important, that we want to drive fundamental research to tackle those two first challenges, to build up on the methods that we are seeing that are so successful, and tuning them to the right applications that work for the industry and work for the society. So there's a huge number of applications of when I say AI, I more mean augmented intelligence rather than artificial intelligence. I think we are still quite far from some of the statements that are put out there. Nonetheless, the applications are there, and we see that pretty much everywhere where there is a data-driven decision process involved, some sort of machine learning algorithm that allows to filter that data and is used. And applications and examples of that is, for example, a fraud detection and anomaly detection. So we have a group at Turing that specializes in building sophisticated networks of financial transactions, and by analyzing that, they are able to detect which transactions, which chains of transactions may be fraudulent, and we've been having great successes with that. The applications to the risk management, and including trading derivatives. So what is happening at the moment in investment banks, there is a big shift towards using machine learning methods, but the way those methods are being used are that you combine them with the risk methods that we know. We wouldn't like to give all the financial system to be managed by data scientists who don't have a background in finance. They don't fully understand all the caveats of finance and risks. So I think this is really, really important to get it right. And they're great examples. You can use the models that we know and understand, and you can use those models to train some of the neural networks to improve your risk management, by the same time making sure that you do understand the risks and you're not introducing a new risk to the financial system. Lending and investment advice, so this will be my running example, is a great application. Insurance, we've been hearing about amazing progress that has been done, that you have a small car accident, you walk out of the car, you take a photo of the damage, you send that photo to your insurer, and within 7 minutes you get the claim and money is in a bank account, so things are slowly happening. But of course, there are great risks with that, because the same company that is paying your claim can also analyze your data and try to understand whether you will be willing to accept a smaller claim, because from other sources of data they know that you might be more vulnerable. So it's really important that we really think carefully about all those things that we can do. And risk monitoring of a financial system, of course, this is something where heavy machine learning and big data sets are extremely, extremely important, and we're doing this kind of work. The other point is shared data sets. So I think we need to move into models where we learn how we can leverage data sets that are at the moment in the different places. So I'm bringing here example of open banking that is coming as this directive of that is coming in the UK, that is essentially forcing the largest retail banks to share their data with third-party platforms and new players. And the idea being that if, as a bank, needs to make a decision whether they will give you a loan and they want to look at your transactional data, typically each person will have 3, 4, 5 accounts at different banks. So it's inefficient if from the bank perspective you can only access this one data set. You could do much better if you could get in access to data sets that other banks have it. So this is one of the big challenges that we'll be having in the financial systems. And we need to do that, and we're seeing that actually what is happening in Asia is that there are big companies that the financial system is much younger than here, and therefore there are financial companies that hold huge data sets, and that gives them a huge advantage. And ultimately, all we do is, like I said, should be serving a society that could, financial systems effectively will become more efficient, will become cheaper, and will increase the financial inclusion. What I mean by that, that by being able to tap on alternative data sets, the people that at the moment, say, have a poor credit history and normally wouldn't be able to get a loan, will be able to get it, because we can understand that there are people we can trust by analyzing their mobile phones bills or whether they're paying rent on time. So these are all the things that we are trying to do. So let me walk you through a little bit some of the more concrete research methods that could be used. As an example, I picked the decision that we need to make about giving someone a loan. So typically, what's going to happen, so there's lots of talking about black box, and I want to shed a little bit more light into that. So typically, you start with data. So your data might be a credit history, number of credit accounts, income, expenditure and consumption patterns, mobile bills, and so on, right? So these are all the data sets you want to take into consideration when you're making a decision about giving someone a loan. So the simple models that were used in banks recently, or in most of the banks are still being used, are taking all those data sets, or even not all of those data sets, and trying to put the weight. So how much, say, credit history, how much impact it should have on my decision about giving a loan, or how much someone's income or ratio of the income to the amount of money someone is trying to borrow should, how much weight that should have on my decision. So these are simple models that we understand, and then we make a decision. And if someone comes back to us and wants to question the decision that he was given or not given a loan, then we can quickly answer, look, this is a model. You were not given a loan because of that. Of course, you can do something a bit more, something slightly more sophisticated, and what is happening is what I called handmade or engineered features. So it doesn't have to be just the income. It could be some relationship that you've discovered or has been discovered in the past, but something that we can understand. So these are what I refer as the simple models, where you need to come up with features before actually yourself. The neural networks, on the other hand, they are this fantastic device that you don't need to think much, you don't need to engineer any features, you can just press the button, and it's relatively easy to do it these days. and see what the network will tell you. So how that works, so this is the a picture of the neural net. You feed your network with a data, and then what happens effectively, once your data is passing through the different layers of the networks, the data streams that are being fed are interacting with each other. So I don't want to go into details, but there is actually a nice analogy that I've read about recently that comes from the social physics. If you have to make a decision about something, you have some data set, so you have some information. If someone asks you, would you give that person a loan, then you could make that decision yourself, and then you will go to someone else to bounce that knowledge of a colleague and say, look, this is what I think, and that person might have a different information, and then will tell you something. So you interact, and for these interactions you update your view whether you want to give that loan or not, and then that happens again. So as you pass through the networks, you interact with more people and then update your knowledge. So this is very much the process. The people are making decisions, and this is what is happening on the network. And I'm making here a little story, but actually, mathematically, the models that are being used in social physics to describe this type of interactions and models that are being used to train the neural networks are exactly the same. And recently, actually, there has been research to discover that. So we have much better understanding how the neural networks work, and this is kind of stuff that we do at Turing. So this is a network. We can train them at network. It will give us something, but the individual weights of the network has no meaning. In fact, it doesn't matter what those values are, and there might be different combinations of those values, and they still give you an answer. So that's your model. But the risk you're running, and probably all of you have seen that, is that this is the example from the Ian Goodfellow and his collaborators, that they've discovered that they took these big neural networks to train on images. So they've trained it, and the network was giving a good result. So X is the data, it's a panda, and the neural network was confident this is a panda. And you add a little bit more noise to the picture, so that to the human eye you still see this is the panda, nothing really changed. But the neural network now thinks it's a gibbon. So it's very easy to actually fool those networks. And this is a standard diagnostic that you should always run. So you have a model, you train your model, you think that model is doing something. But what you need to do now, you need to check that the data is being fed into the network might be just slightly different, and that might lead to completely different results. And particularly in the financial context, that could have terrible consequences, right? So we need to be careful about this. This is not to say that neural networks are great and they integrate lots of things, but we just need to be careful sometimes when we use them. But there is a plenty of other methods, actually, that are very good in dealing with financial data. So what I typically, like I said, when I say financial data, I mean noisy data streams that change with time. An example of research from Turing on that is coming from a group of Terra Lions and Nihao working on something called path signature. So this is a method that allows you to encode information from the stream of data. And they've been having great successes, and they've built all the algorithms using pure deep networks on Chinese letters recognition. So imagine you have an app on your phone and you draw a Chinese letter if you can, and you want the app to recognize the letter. So this is an extremely difficult task. And this algorithm the group at Turing developed actually is state of the art. And it has been used to action recognition, something I'll show you in a moment. And these methods can be used in actually fraud detection and anomaly detection and detecting anomalies in the limit order book in a financial market. So, oops, sorry. So just to tell you a little bit more how that works. So we have here a toddler clapping the hand, and the task is to be able to classify whether this is clapping a hands on some other action. So as you see on the right, you have this landmark. So you have those lines drawn on this video, and those lines are moving in a dynamic way, very much like financial data is moving in finance and interacting. And you're trying through that movement recognize which action that is. So this is much more difficult task than just classification of the images that are static. It's a very noisy. You will have 100 toddlers and they will be clapping hands in different ways, at different speed, a different angle. This is very easy for us humans to recognize, but this is very difficult for machines. So you can do this action recognition. I skipped that, running out of time. And the interesting thing about this method is that it's extremely good in extracting those patterns and is actually explainable. You are able, after getting your answer, you are able to say which data streams, which interactions of data streams actually have the input out, play the most important part in the output. So what I'm trying to say is that while neural networks are there and they're great, there are other methods that we understand quite well that can do a very good job, and they do not suffer from some of the issues of the neural nets, and are more suitable for financial applications. So there is, like I said, there's quite a bit more of different things. I skipped that. And I want to go back a little bit to the thing when I said about economic data science and building a digital twin of the economy. So this is the little game that was created by DeepMind, where blue and red dot represent agents, and the green stuff is an apple, and the agents are getting scores for eating the apple, and they also have a laser beam. They can knock out the opponent. They're not getting scores for that. And Google was interested to understand whether the agents will collaborate. So whether they will share the apple and they both be happy, or they will start fighting using a beamer. And so they started playing that game, and they started increasing resources and decreasing resources, and also increasing intelligence of the agents. And it turned out that, as we can expect, when the resources, so the amount of apple is going down, and the intelligence of the agents is increasing, the dots became quite aggressive, and they started fighting. So the reason I'm showing this is that there is actually quite a lot of research going into something which is called mechanism design. And so the idea being that once you have a system, like in economy, and even if you know that your agents are selfish, and there's nothing you can do about this, you can still try to design incentives in such a way that the agents will ultimately reach some social equilibrium. And I think, this is just a little game, but I think we're getting closer with amounts of data that we're having and with amounts of a compute that we have to start doing this type of simulations to understand things that are happening in the financial markets and the things that are happening in our economy. And so this is where I see the research heading in the next years. And the very last thing I want to do, I want to advertise that there are lots of questions about use of ethics in finance, and at Turing we are organizing a conference that will take place in 16-17 of July with FCA and ICO, where we will be discussing and ethical use of the AI tools in financial services industry. So thank you very much.
Thank you, Lukasz. Next, again, please keep your questions, write them down, keep them warm. Next, we have Vincent Branch, who's the CEO of AXA Accelerated division. His expert team focuses on innovation and insurtech, and he's going to talk to us about some of the use cases going on he's been working in his company with his team.
Thank you very much, Nico, for the introduction. So I'm Vincent Branch, head up or joined to set up the innovation function at AXA Accelerated. Today I'd like to share some of the case studies, some of the real-life examples around how we're driving commercial applications. In particular, I'd like to share our payer-to-partner strategy around how we're thinking about how we can blend trust and bring in more trust into financial services and insurance. and actually really driving a sort of better innovation culture. So first of all, as an introduction to AXA. So within AXA XL, we specialize in ensuring the complex, difficult, large risks. So if you think of earthquake, hurricane, marine, aviation, cyber, those are typically the types of risks that we're insuring for a whole range of, in particular, corporate clients, SME clients, and mid-market clients. So the way we structured innovation across the division is we have XL Innovate, which focused on equity investments, where we partner with those companies and we participate in taking part in those organizations. We then have Accelerate, which is the area that I lead, and we're driving partnerships and driving commercial opportunities together. And then thirdly, we have Digital, which is driving operational efficiency and how we can use that to be better in how we operate. So to give a feel for Accelerate, as mentioned, we're focused on the commercial opportunities. There's really three areas in which we focus on. The first is around developing new distribution opportunities. And the way that we're doing that is actually looking to partner with alternative distribution, in particular the technology companies, in how we can bring products to market in a very different way with a very, very different experience. Again, going back to payer to partner, is we don't want to lead from an insurance transaction. We want to think around a range of services that we can offer to those clients to help them run their business, to help them be more successful. The second part of that is actually developing the propositions. How do we wrap those services around that, and how do we develop those services in a very, very different way to how we sold insurance in the past? And then the last is thinking about our technical capabilities of how can we make a step change in our technical capabilities around how we underwrite, how we price, how we risk manage, and doing that in a completely different way using the new technology that's available. And I'd like to give you a couple of examples of those. So let's just talk about how we approach innovation. So we run a portfolio of experiments, typically around about 15 to 20 a year. But every single one of those involves an external partner. We specifically want to bring them into the organization. We want to be able to partner with them, help them develop their services, but bring those new perspectives. But we also work directly with the business. But actually, we go beyond that. We actually get the business to lead the experiments. And that's part of the cultural change that we want to drive. And we found that being very, very successful in thinking about how they can actually look at understanding the new technology, get involved in that, but actually have skin in the game of driving innovation within the organization. And then really the last part is every experiment we do and every partnerships we do, we're really looking for shared value. What do I mean by shared value? The first is the client has got to be at the forefront of what we're doing and how we're designing those benefits. Second of all, we've got to be very transparent about what we're going to get out of that. And we've got to share that with our clients. And thirdly, there must be a societal element to what we're doing. And that shared value underpins all of the partnerships that we have. So typically the experiments are very small and focused in what we do, and we test those in a short time frame. But actually, every experiment and every partnerships we do can be scalable. It has the potential to be scaled. We typically don't touch anything that is perhaps bespoke to a particular business unit. We want something that could be used across the wider division or the wider group. And then our challenge is working out those successful experiments and then working with the business to decide how we best approach that scalability. So there's really two examples I'd like to share with you. The first is around mobile autonomy. We've had a strategic partnership with an organization called Oxbotica. You may have seen them on some earlier stages, and they were also here last year. So they specialize in developing mobile autonomy software. They create the brains that go in an autonomous car. But actually, what's really interesting about them is their technology could be applied into forklift trucks at one end, all the way to standard autonomous vehicles that can go on the roads, all the way up to complex construction equipment. So actually, the breadth across the industries is really, really interesting to us, which means actually we can help the broad scale of clients that we work with. So what we've been doing we're part of a UK consortium of bringing driverless cars to the roads by the end of this year. But actually, the reality is we've been running driverless cars on the UK roads for the last 18 months as part of actually testing and thinking about how we can think about the risk management aspects for that. So our role within that is we're embedded within a whole range of partners in developing that, but specifically we're looking at the risks of when you're looking at particular journeys, particular risks, we're thinking about the characteristics of those journeys. So for example, how often has that car done that route? How well is the algorithms and the AI trained for those areas? What's the weather conditions? What's the traffic conditions? How risky are those journeys? And we're blending that together and helping that to make decisions around what's the best journey to take. But actually the real goal is to actually embed part of that risk decision making in with the software. So it's an actually integrated solution so the clients, the partners can make decisions over those trade-offs between performance and risk. And that integration is a really critical part of that. It can't be something like a traditional insurance we do at the end of the year, we do once a year. It's got to be in the actual technology itself. The second aspect is we've also been working with our partners to actually design a new autonomy proposition. Autonomy risks are completely different from any traditional insurance risks. You've got your standard liability, you've got your standard bumping into other cars, but actually cyber is really prevalent. Product liability, the actual aggregation of risk to the specific components in those sensors and cars is completely different on a scale that we probably won't see in other sectors. So how do we address those? So within Accelerate and working with our external partners and working with the business, we've brought together all the right experts to address that. And so we've developed a global autonomy product, and we did that in 3 months, from concept all the way to getting that product live in the market. And so we now ensure a whole range of autonomy pilots and trials across the world. And we're actively seeking to work with those partners. We need to be able to learn and work with those partners to really help that product evolve. And that's not where it's going to stop. And then the last example is around cyber. So clearly there's a huge amount of relevance for cyber in what's been talked about in the last couple of days. So we've really developed a new cyber product. Again, we launched this in a very short period of time. But specifically, we're thinking about how can we help small businesses. And part of it is how we can bring educational content around what is cyber. But then the other part is actually how can we bring content and like a dashboard to say what are your risks that are specific to your business, but actually what steps can you take to actually address those risks. So the focus isn't actually on selling the insurance, it's actually on helping them address their particular security and cyber needs. And this is something we're working with a whole range of distribution partners in thinking about how we can enhance that and have that a wider proposition. And last thought I want to leave you with, again, is going back to the payer to partner. We need to have a change in mindset about how we think about providing insurance and services and a wider piece. And again, that comes back to the motive as to why we're doing that. And at the heart of what we're trying to do is insurance isn't about payment. It's not actually about protection. It's actually about helping clients grow. It's about helping clients thrive in this incredibly complex changing world and thriving with these new risks in these new environments. Thank you very much.
Thanks very much, Vincent. We're now going to set up for the panel discussion, and I'm just going to hand over to Lukasz, who's going to chair.
So thank you both for very interesting talks. One of the things that I think came about from both of you was saying that the world is changing, those technologies are here, we can use them, but, oh, thank you. But how, and you both said that, you know, at the center of that should be customer or should be client. How are you ensuring that the customers and clients are fully benefiting from those technologies with help of organizations like yourself?
How's that? Yeah, I think, oh, it's very loud now. So the customer-centric, I think, is absolutely in the center of how do we bring the technology to people. Now, for example, in Hong Kong, we notice people, you know, social payment is very, very popular. So one of our, you know, solutions is called PayMe, and it's becoming, you know, it's only a couple of years, and it's becoming one of the most popular what's the most popular mobile payment solution. So people use it because they're really helping them to discover new things and also very convenient. So those are from the technology point of view, tons of machine learning stuff has been putting in and using transaction data as well as external data to, you know, to make that really accurate. But I think the technology side is easier to identify. On the behavior side is harder. Now, for example, the financial well-being is a very important concept in the financial services, and it's a reasonably, you know, abstract concept. How do we bring the behavior into that so people actually realize what they do make the major difference? So we've done some research around customer behavior, and actually we find out being a saver or a spender and make more difference in terms of your financial well-being status than your income between 20 to 100,000. So there's a huge, actually, gap of our understanding. And once we got that, we're actually putting in a lot of things which is prompting, you know, the saving behavior. And just make people more aware of that has made a big difference. Because that side, I think, is softer, but have a bigger impact on the financial, you know, activities and our well-being.
So I think there's a couple of angles to this. I think one is around the actual education content we bring to our partners and clients. I think we've all got a really critical role in doing that, and that's very, very relevant for retail and personal lines, but it's just actually as relevant for small, medium businesses in how we do that. There is a big gap in how some of those sectors are being serviced around understanding those risks. So we see that as the forefront. And then the other piece is around the motives for doing that. We've got to be really clear about why we're doing that, and what's in it for us, but also around, you know, we want to be working with people that are excited about solving some of these problems for our clients.
Thank you. And what's your approach as an organization to some of the ethical aspects of using technology? So, of course, you were saying that your motivation is to help and you're doing all those amazing things, but the challenges as bias hidden in the data. How you ensure do you train people within your organization? What the processes do you have as a market leaders to make sure that we get it right?
I mean, it's a really great question, and this is something that is certainly evolving very fast. I mean, just a couple of observations to share first, and then actually I'll give some examples around the processes. I think the first is around who you work with. So it's around your people, and it's around the leadership from the top, around what is expected, around how we think about our clients and what's important and what isn't. It's got to come from the top. And in our organization, it absolutely does come from the top. We were very explicit about not underwriting and insuring certain sectors in the energy sector around coal mines and various other things. We felt that was a really important stand to take. The second thing is we also expect the same of our partners. We also expect, and it's the style in which they engage with us around what's important to them. We want them to have a shared interest in our clients and who we're working with. And then the last part is, how do you think about those processes? How do you actually think about embedding those things? So if we think about privacy, we're thinking about privacy by design. Actually, this is something you do at the start of everything you do in what you're working on. This isn't a process you do at the end. This is something you have to think about. And if you're sharing any data, the first thing you're thinking about is how can you manage that risk? And then we've got specific committees and governance of where we sort of go through on a deal-by-deal basis, where we actually look at all those risks and get approvals for those.
I think a very similar approach as from a ethic kind of a decision has to come from the policy as well as the processes and our understanding from the data perspective. So from the data, for example, we do have lots of bias, from the data itself, the algorithm itself, the ability to interpret. I think we turn to get a bit deeper and have gradually building capabilities to understand it. So there is clearly an issue around this, and we're trying to enhance our machine learning-based approach versus rule-based or simple algorithm, as you explained early on, to have a better governance around it. So that's one side of the equation. We must have capability to do it. And many of the bias actually introduced from our people prone to more automated decision rather than the behavior. So that's a new set of decisions we need to make. How to push things and advertise and what's our value proposition to make sure people are aware of the certain biases maybe come from more automated decision. And then on the policy side, I think this is one of the absolutely on top of the whole organization's mind. It's about how do we putting in the right consideration from the very beginning by design to take that into consideration, the fairness, the transparency, the principles. Lots of government already putting up the principles. At HSBC, we also have lots of work going on in that space, and also education. So there are staff education if you're frontline, or if you're obviously in the risk space, or if you're a technology space. We all have trainings now putting into place. Some of the executive training also starting to put in. I think the awareness at the staff level, everybody get an understanding of what machine learning and what the data, that in the first instance, what that impact to their now day-to-day talking to the customer is absolutely key in that ethical consideration.
Thank you. I think I fully agree. I think it totally needs to come from the top, and you need to start from the very beginning to cultivate this right behaviors. I mean, example of that is actually financial markets that are being regulated for the last 200 years, and then still bad things are happening. A financial crisis is showing that regulators is not always the only answer. It's just culture, and cultivating this right culture from the very beginning, I think is a key. I want to move a little bit into the topic of trust and innovation. And so, one of the examples that I have that I'm referring to the context of the trust of using black box algorithms that are there is the context that every single time we take a plane, is not that many people actually understand the details, why it works, and then somehow we trust that everything will be fine because we trust that the people that build the plane, they have the right knowledge. And how do you see that is being developed in the context of machine learning within the organization?
I'll give a relative. So a couple of things jump out. Actually, the first is around accountability. If I was a structural engineer designing a bridge, it's a huge responsibility and risk. But I think that engineer fully recognizes the risks that they're making and the sort of professionalism required in making that decision, and the QA required in coming to that decision. If I think about data science, we're potentially putting the responsibility on one person to build hundreds and hundreds of bridges. And I think we've got to bring that sort of broader perspective to the accountability on what these algorithms are being used, which will then actually make sure that we've got the appropriate QA processes and assurances and governance around that that's proportionate to how the algorithms are being used. So I think that's the first thing. And then I think the second thing, I know it's been touched on a lot in the last few days, is the transparency of the decision-making and the methodology around the algorithms. It just isn't good enough that we don't understand how some of the methods work or how we've come to certain conclusions. Personally, I believe we're on a slippery slope when we go down that path, if we think about biases and discrimination and various other aspects.
Yeah, I wouldn't repeat, but just add one thing, I think, is the purpose. We need to be absolutely sure, the reason we want to use that data, the reason we want to use the technology is for the right purpose and for the right thing. And I think more questions need to be asked at the beginning to really build that trust. I think that's, one thing probably in addition to all of the key components. Yeah.
And so how do you cultivate this innovation culture, how you make sure that you have that right balance between research, innovation, and trust within your company?
Okay. I think one thing probably doesn't help is trying to segregate people who can do research or allowed to do innovation. It's a very big behavior, and I think it's a particular mindset and also the scientific approach, putting in a hypothesis for every single person when we do our jobs, and that is how we should approach the problem. Looking at it from more scientific point of view rather than gut feel, for example, and then go very deep and then not afraid of tackle a complex problem, for example, and have an alternative approach. Those kind of a behavior, they are not titled by a particular group or individual, and then also not always necessarily to do with your research background. I think that kind of a mindset and also practice, together in a very real scenario, just practice. I think absolutely everybody could be part of that, and I think that's where you're going to see a culture change and people value different opinions and value the IP and what we can do and pursuing something excellence. That would be the key for driving research and innovation in a day-to-day basis.
Amy, some excellent points. And actually, I build on that first one, which is, we have a mantra at AXA Excel, which is innovation is everyone's responsibility. And what we mean by that is it's similar. Is actually we want everyone to think about that and be, to actually explore, discover. Again, if we think about all the underlying traits we had as children around sort of discovery, we lose that as adults. So as organizations, we need to again foster that culture of, you learn by mistakes. That's the key way that we learn. And then the other important aspect again is we need to bring in external perspectives. Again, if I think about insurance, one of our biggest challenges is how do we bring diversity to what we do? So it's critical that we broaden out the skills, the experience, the backgrounds of people into our organizations, and we work with different people to really bring that sort of different culture.
Thank you, that's a great answer. And I have to share that, with similar perspective from Turing. Turing is a place where you bring researchers from different fields under one roof. There are no walls between departments of economics, computer science, maths, and statistics. And this creates incredible research and innovation environment where people talk together, exchange knowledge, and I fully agree. That's really good. The very last point that I want to touch upon was something I've mentioned during my presentation, is sharing data. So we are entering this phase that we all feel that we can benefit from having shared data sets and various organizations being able to tap on that knowledge and that data that you might not have. How do you, as an organization, are you prepared to do that? Are you already doing that? Do you have some examples where you already started using some shared data sets with other organizations or other companies.
I think open banking, as you mentioned, is definitely a big initiative. It definitely helps when we look at the data from a broader perspective. But I also want to bring in another element of it, which people quite often miss. So when I was in Singapore, telco as an industry already starting to put different telco industries together, for example, and so you have a geolocation, and then they, really want to encourage the ecosystem to leverage on that data set. However, I think is a couple of years into that initiative, and I would say the real benefit has yet to be seen. And one of the key challenges in there was actually interpret that data is a lot harder than most people realized. So we turned to focus on getting the data out, but actually the ability to really interpret and understand with the domain and really with the right purpose of using that is often the critical stuff to leverage on that. But yes, we do definitely very keen on using data from all the sources. We also publish some of our trading data. They are already published. I think the ecosystem for sure is the where we can get a much better insight and we can make a much better decision, and also in the secure manner. That's the way of the research into privacy preserved method of sharing or encrypted format, so we don't have to see the details, but you can make a better decision. For anti-money laundering is a classic example. We would benefit a lot from it. So I think yes, the sharing data, but also focus on understanding and the core your competency around using those data.
Okay. So thank you very much. Thank you, the audience, for being with us. Thanks.